long have you been like involved in cryptocurrencies, or like how long have you been like hearing about them, or like did your friends get into it before you, or like how did that whole story begin?
Yep. So I'll tell you the medium length story. I had a buddy who we met at like a friend's, it wasn't a graduation party, just a mutual party. And this was back in, I guess, 2016. And he's like, dude, you got to buy Bitcoin. It's on this open, decentralized ledger. It's awesome. Like this is going to be the wave of the future. And I asked him how much one was. And he was like, $400, right? Like, I don't remember. Yeah, I guess maybe it was 2017, 2016. I don't remember the day. It was like way off years ago. So he said it was about $400. And I was like, oh, okay, this sounds great. But I also had like a 1-year-old or something like that. She was very young. I needed sleep. I was tired. I went to bed, right? Forgot all about it. And then in 2017, yeah, towards the end of at the very beginning of 2018, actually, my buddy Narendra, who's a mutual friend of the guy who was talking to me originally, says, hey, you got to buy Bitcoin. You have to get into it. And I'm like, yeah, okay, sure. Tell me about it. So we have basically a dinner meeting, and he tells me it's $15,000 a coin. And I'm like, oh my God. Like, I felt like I missed my opportunity, right? So I basically listened to every word he said. He told me to read some books. I read the books that he told me to read, and then I read like 10 more books. Literally, they're on my Apple account and everything like that. And at that point, I basically started to buy on Coinbase. And that was really in about February or March of 2018. It's like when I really, really started. And it's basically just been all consuming, just like learning all the details and monetary theory behind it, the psychology of it, the economics of just the game theory. It's mind blowing and mind blowingly awesome, should I say? Like Bitcoin, Ether, all of crypto, basically. And that's how I started.
I remember back then the conception around cryptos was like really different, so it's harder to talk to anyone about it in general. Because like anytime someone talked about it, the connotation around it was around not what it is today. Today is like central bank digital currencies, and it's not around like the Silk Road kind of stuff that they used to talk about way back when. So okay, real quick then, how do you approach crypto markets? Like right now, like what is do you change your strategy over time? Do you have a current thing that you're trying right now? Do you
it's
try to like research the coins first, or
yeah, like I don't think you can have like just a hard line stance of I'm going to do this one thing all the time.
Yeah, I'm noticing that as well, especially as they add new technology and like but you know what is actually like one like hard line rule that I'm noticing is the amount of hype that actually is generated around a coin is like not insignificant, and tends to be one of the leading indicators of actual extreme price action.
Yeah.
Like as we've seen in Doge and stuff like that. But like technology and stuff like that, and the actual like fundamentals of the coins, to me, what I've noticed is like maybe at most what it creates is like a base layer of demand such that you won't really be going to zero during a bear market. Even if you do lose 90%, there are chances are that it can come back over time. But like I think there's still this huge layer of speculative value or speculative price on top of the coins. That's like the actual fundamental value of the network is not being considered because it's not even being utilized at that level, is what I'm saying. That's why hype is so important. It's because like all the actual price action is in the sentiment itself.
Yeah.
You know, which is interesting to watch like the fear and greed values recently, because it's like it's been hovering around very, very fearful areas for a long time.
I saw it at 8 one time, like 8. Right?
And then like who's feeling that way? Like sometimes I wonder if I feel that way and I don't know.
Yeah, man. Like I remember seeing it 99, 98 before, right? Like it's just like pegged out like maximum greed. And here we are in the reverse end of the spectrum. And it's
Well,
like,
the interesting thing that you can see is like it'll be at the different fear levels at the same price,
yeah,
just like going in different directions, I guess, you know? So yeah.
yeah,
But
it
yeah.
just shows you like how irrational the market is, right? Like it's just which end of the, are we going on the up part of the hill or are we coming on the down part of the hill, right? Or like we can be sliding downwards, downwards, downwards. We just chill for a second. And like you can't use the fear and greed to trade with basically because it's like,
Not really on the short term at all. Like what I'm
oh,
seeing it's like you have to add it to other things as like a confirmation, if that makes sense.
yep, totally.
Or just as a risk factor. You can be like, okay, just in general, maybe this is a less or really higher risk trade to be holding here, considering the levels of the greed, you know, like that could make a lot of sense. Um, it doesn't mean stay away from trading it. It just means like there's a high chance that if you hold this thing for like maybe 6 months, you know, it's Bitcoin, and it's gonna it could easily be volatile in a bad direction for you. You know?
Yeah, so that's the thing that gets me is like most people aren't aware of like how this thing behaves in a bear versus a bull, right? So it's like, oh, I can just hold this thing forever and it'll be fine. Like, no, it might not be fine. If it's not
People just don't really understand
Bitcoin,
how it functions at all, because it's like, and in reality, I don't, because it's like we don't really know the future, you know. But like at least we've been seeing like cyclical patterns and stuff like that. So some of the stuff kind of just seems, you know, it's funny. I was gonna say it seems a little bit like too easy, but like that's exactly when the market turns around and changes. You know what I mean? It's like when everyone starts thinking the same thing.
yep, yep.
And I'm starting to wonder if that's like why we haven't seen something like an altcoin season recently. Is because everyone's sitting here waiting for it from last season, being like, oh, this is all you have to do is like buy the Litecoin and it goes up like 50 times from the bottom. You know what I mean?
Yeah.
And yeah, which is why like I was thinking about this yesterday again. Um, the longer I stay in crypto, because I've been in this area for like 8 years or whatever, I love altcoins and stuff, and I love all the new technology and whatever. But like the longer I stay in it, the more I realize just like how strong of a hold Bitcoin has.
100%. Yeah.
And like, I mean, I guess I knew that, you know, and like, right. But like, but like, it make like, I totally understand like the maximalist position, but I also don't, because it's like, there's new technology, you can do stuff better. But at the same time, it's like, if you're actually going for an investment, like, I mean, I really think like Bitcoin is like like, you know, not financial advice here, but like Bitcoin's got to be the safest one in the industry, just because of its like foothold that it has. It like every coin in crypto is pretty much priced in Bitcoin, other than like other ones that are like slightly priced in Ethereum, you know. But like even those have like a Bitcoin
DeFi
price. As soon
coins and stuff like that. Yeah.
anything on Sushi Swap or Uniswap, you know.
So kind of
But even
jumping
those are
in.
really more dollar correlated, anyways. So
Yeah. So I think what you're saying is exactly your answer, basically, why there hasn't been an altcoin deal, right? So like we're used to thinking of things versus like Bitcoin for the most part. And because of that, everything's denominated in Bitcoin and denominated in dollars, like the world reserve currency versus Bitcoin. And those are the two things that it's normally, and then occasionally it's priced in ETH. But like everyone knows, like every market participant who has three brain cells in their head and has been paying attention to it for more than a year or so, like if Bitcoin is showing weakness, your alts are going to bleed much more against Bitcoin dropping than anything, right? So like Bitcoin goes down 10% a day, it's like complete decimation on the alts, right? You're going to
yeah,
see 15, 20, 30% wreckage on the alt end of the spectrum versus Bitcoin. The inverse is also true, like during a bull market, right? You almost want to be in the altcoins, but it's all about figuring about where
yeah.
we are
It's also
at the
about
time.
timing it though, because like, you know, it's funny. It's like I was thinking the same thing, and then like you buy what you think is a cheap altcoin, and it just stays at that price for like 2 3 years, and you're like, dude. Meanwhile, Bitcoin goes from like 3 to 60 grand, which is why
Yeah,
I just think over and over. I'm just like, Bitcoin's just gonna outperform my portfolio anyways, like regardless of the amount of alts I try to trade in and out of, unless I like, okay, like once in a while you can grab something like a metaverse hyped coin like Gala or something. And
or Solana, right? Like you can
right, you
see
can
the
grab
things
one of those
ripping up
layer
on.
ones even, and at the very bottom, and have VCs pump it like that, I guess. But like,
Yeah,
but even that, if you, what I've noticed is even if you do that and you get really correct in like 2,000% trade, you still got to wait for the rest of your portfolio to catch up before you.
yeah. I just think it's a matter of taking profits at that point, right? So
Yeah. But how much profit is really reasonable? And do you think that really depends on the amount of money that you've invested? Like, do you think, for example, like 30% is the same whether you put in like $10 or like $100? And does that like scale up differently?
to me, I think it's about the amount of risk you're willing to take, right? So
Mm.
like it's a lot more to be it's a lot easier to be more risky with a smaller amount of money,
Yeah,
right?
exactly. So that's why I like to look at it in percentages, but eventually you have to look at that percentage like it actually like references a real dollar value and be like, you
Yeah,
know what, someone could actually live off that dollar value for like a year. Like maybe I should look at it like that instead of like
yeah,
it's 3% of something, you know? So
yeah. So that falls under risk, right? So like that
yeah.
dollar value that you can live off of requires a much more substantial portfolio, right? Like you can't come in with $1,000 and expect to be able to live off of a year, create enough profits to live for a year off the profits with $1,000, right?
Yeah.
If you are,
Without
you're
just
going super
taking
degen.
one bet and just getting really lucky with it or something.
Yeah, exactly. Now if you come in
And
with a
quick too.
yeah, now, if you come in with a larger portfolio, like, and you have a lot of working capital, then you're going to want to segregate like different investments, and you're going to want to you're going to minimize that risk, right? So, like personally, Terra, for example, I took a hit on Terra because I couldn't. I knew there was a possibility it wasn't sustainable, like it's pretty clear, but I didn't expect it to die like that quickly, that fast,
Hmm.
right? So what I did was I basically decided, hey, this is risky, but the yields are really good if I'm sitting in UST anchor, right? Um,
Even Luna Bears were thinking the same thing. I posted that in my article. It was like I watched the whole interview where this guy was talking about that.
mhm.
It was funny because it was like a debate between people talking about like whether Luna was going to collapse.
Yeah, I'm
And the
gonna say it
guy
out
saying
loud.
Luna was going to collapse was like, "Oh yeah, I totally own UST in my fund where I just it's a little bit, and just take the free 20% while it lasts." And I was like, "Okay,"
Exactly. No,
because
that's
even
fine.
they didn't expect what I didn't expect, which was that it got so cheap that they were literally worried about people buying up enough of it to actually change the governance of the network,
Yep.
which is something that like I guess you can include in your mathematical models, but like that's so far beyond what I would have considered to be a threat. Just because I wouldn't have assumed that much actual liquid Luna was available for purchase to be able to like 51% attack the network
No, it
in
was
that way.
out there on the exchanges, right? And
I
also,
guess
someone
so.
bought a ton before they did that. Like I remember watching the Discord notification go out. Somebody bought like they market bought that too. Like you should see it
Right,
spike,
right.
right? Someone bought like $1 million worth at like 0.004 or something worth of Luna. And I guess the people running the chain saw that and they're like, oh shite, like we gotta we
Well,
need to
but when you
stop
think
this.
about it though, like, is that even like could it have been worse? Like, what if like what if he did change the governance? It's like they still shut down the coin anyways, and it was like the worst case scenario anyways. Like, would it have really been worse if they? Because it's what I'm saying is like if they let the system equilibrate, Luna would have gone even cheaper, and it would have been like but it would have probably bounced back over time. Like that's how this like
Oh,
it was working over time. Like
oh
the
man.
idea is that like eventually it levels out, so you have the same market caps, and then eventually, honestly, like what would happen is Luna starts to deflate again, and it would just go in these crazy cycles again over and over. But like
Nah. So you've
that's
been around
mathematically
longer
what's
than
going
me.
on. But they broke it at the bottom.
So you've been around longer than me, right? I've been in this market for like 4 years. There have been, okay, think about this. How many cryptocurrencies are out there right now that we know of? Just go check Coin Market Cap. It's like over 14,000,
Right.
right?
But like when you think about it though, most of those are just like people every day making a new ERC20 coin or like Binance Smart Chain coin. and they don't really count. Like to me, it's like the new coins are like layer ones and like maybe a layer two that like does something like
proper development and proper
you know?
funding. Yeah,
Right. Yeah. Because
but
you know what's
like,
interesting that I've learned, man? Like you can go on like WordPress and there's like plugins that you can just like make a new coin with a button, and
yeah.
there's too many out there.
So my point being is this, right? There have been a plethora of other like funded strong coins that have gone to zero. Like you've been around longer than me. Like think about Feathercoin, Namecoin,
You know, I
Roll.
saw that the other day. Like what even you know what I'm wondering though is like if they're still around, I wonder if tokenomics is eventually just going to take hold and they'll just kind of skyrocket in price or keep up with other stuff, or like because are like you're saying just totally not used as chains at all.
Yeah, they're not going to
Weren't they
be
used for payments
chains.
like still for like the IPFS or something?
Say that again.
There's like the interplanetary file system thing that I think maybe Feathercoin was related to, or maybe that was just maybe Feathercoin is just like another like, kind of like Litecoin copy that didn't really take off as much. I
Yeah.
don't really remember honestly because it's like it's because you're right, it kind of just fell off. But you know
Yep.
it's funny though, like that's why I'm still into Litecoin, is because it's
Yeah.
like it's still around even though all this time, and I'm watching the
And
user
it
base
still
grow, and
has
it's kind of
some like
interesting.
real market use, right? Like people are still willing to buy and hold it. Like as long as there's actual participation in the coin, there's a chance it's going to come back. But like
Yeah.
you have seen hundreds of coins pop into the top 10, they get momentum, and then they lose momentum. People move on to the next shiny thing, and then they just go away, right? And I
Yeah.
think it's probably going to be what happens with Luna. There's a chance it comes back because remember BitConnect? Yeah, people were buying BitConnect like 6 months ago. Like these are all things, but like when you look at it in the totality, do you think BitConnect's ever going to get any real market value or interaction ever again? Not so much. That's kind of how I feel like with Luna and some of these older coins that have been around for a bit. Like they've had their time in the sun, but like technology moves on. So unless there's like really hardcore development and new movement in that coin, no man, probably going to be sitting at close enough to zero to not make it for the most part. It's not worth the risk of the investment of hard-earned capital for that. And
Yeah, as
those are
for
just
Luna, I would probably agree. I mean, like I really didn't really expect it to get as big as it did in the first place.
yeah.
Um,
So if you have a portfolio that's set up like, hey, low risk versus on a spectrum to like high risk, right? And you have the most degen sliver of a portfolio, and you're like, hey, this is probably going to be lost to money, but let's just see what happens. You could use that to invest in Luna, right? But like if you're trying to make a responsible portfolio or allocation for somebody, I can't see
yeah, you know, it's funny.
anyone
That's
else's
exactly
money
how I
for
was playing it
that.
because
Huh?
like that's exactly how I was playing it too. Because as it was collapsing, I was looking on exchanges for the prices, and I was trying to buy like $6 of it because that's what I had left in some USDC somewhere, and it wasn't going through, and it didn't let me. And then immediately they delisted it, and then in the morning I would have made like $300 that night if I bought that,
Yeah.
because like it was at that time when it was like 0.01, and
So you're going to catch the bounce, sell the
I
bounce.
like I was like, you know what, because my thought was like, look man, like they halted the blockchain, which means no more inflation, which means all the Luna's just out there and people are freaking out and not really know what's going on. And like, they're not inflating it anymore. Now people are just deciding on the price, which means anyone selling is not like new sell pressure, and there's not going to be anything after that. So I was like, this is probably a decent area to like bounce from, even if we go a little lower. And
Yeah.
it ended up being kind of right, but it's like, it just wouldn't let the transaction go through. And I don't know. I was using
So that's
Uphold.
when you look
I
at the
don't know.
dexes, right? Like you got to be on a
Yeah,
dex.
yeah, but the problem
That's
is like, was the DEX really working on? First of all, if you're going to use a DEX that isn't on chain and use like a separate one with oracles, that almost for sure isn't going to be reading the price data right. And like secondly, like especially in this case, but like and secondly, like if you are using the on-chain one, that was the one that like broke and halted, and like what are you going to cash out of? And so like this whole thing was just a mess. It was like really hard to profit anywhere, except for a couple of centralized exchanges who allowed for like some large trades before they delisted everything. But like I don't know, it was just kind of a bad situation. Like I it just devastated a lot of people, and like there wasn't really a chance to like either protect yourself other than not being part of it, or like
just get the hell out,
or
right?
profit. Like there wasn't really a chance for profit on it, really. Like there kind of was, but you had to be like really specific about your methods in the
Like your
moment.
trading plan had to be right on the money, otherwise you were
Right.
going to be trapped.
In which
Right?
case you could have just done another trade somewhere else and just kind of been a little safer, you know?
Yeah.
But at the same
So
time,
like,
everything else was tanking. So like in reality, that was actually the best trade in the market for the time being.
yeah.
So
So
because
what
when
we're
you think
talking
about it,
about
what
is
else went up
super
50 times?
short-term plays, right? Like
Exactly.
we're talking about like on that long spectrum, like to me, everything works in spectrums. Like you got to
Yeah.
have that. Like, those
On the
are
long spectrum, I wouldn't have held Luna in the first place. But on the short spectrum, these are the kinds of opportunities that like when they show up, like if you have the knowledge and like everything to, you know, act upon
and to mitigate
the
risk.
situation.
Yeah, go get it.
Yeah.
Mm-hmm.
Yeah.
So
But at the same
yeah,
time, it's like it just collapsed so hard. I didn't even want to like touch it, you know,
yeah.
like other than just like play money, like literally $6, like, you know. But then even that's kind of like funny to think about because it's like maybe I should just put that $6 into. I keep saying Litecoin just because I think it's really cheap right now. Like it's unnecessarily cheap for how much people actually use it.
Yeah. And the level of adoption it has, right? Because think about
Yeah, yeah.
all the biggest
Like
places,
every
like
exchange has it.
PayPal,
The
every exchange
main,
recorded.
yeah. Like if there's an altcoin out there other than Ethereum that people have, it's gonna be Litecoin. You know?
Yeah. I completely agree with you on that
Or
one.
at
And
least
like that's
exchanges
one of the
wise.
reasons it's going to stick around, right? Because you're going to have new people that come in that have no idea the history of anything that's happened with Litecoin or Bitcoin Cash or whatever, but they're still have trading volumes. They're still generating profit, and there's still like a market use case for it, right? Even if it's just trading back and forth, because that's what the stock market is. Like 99% of the stuff that people are trading on the stock market, no one really cares about. It's just about there's going to be some base economic activity there that you can use to profit if you know how to play the system correctly, right? And ultimately, that's just the way people are. We're going to create something where it's a game of winners and losers for the most part. Like it's literally human nature, right? Like you look at it since we were cavemen and standing up on two legs, like we were trading seashells, right?
You know,
like
I keep coming back to that thought when I think about crypto too, especially when I think about meme coins. Like, and I think about like what really is value and like and price and things like that. And seashells are a really funny way to think about this kind of stuff, especially meme coins that literally, but they're just sitting there and they really have no other use other than to say that you have one or whatever, you know?
So one thing I was going to ask was like some of the getting to know you questions, right? So like, you know, my name is Eric. I was a former like MRI tech. I spent 6 years in the army, and like crypto, I think once I got my teeth into it and once I learned about it, I feel like this is the way for people to get ahead in life as long as they have a long-term perspective, right? Like if you look at things on that spectrum where you have like long-term investments versus short-term investments, crypto is a long-term investment game, right?
Yeah.
Like you're more likely to succeed there
The
than
good
anywhere.
ones, the good cryptos. And that's really where the game
Correct.
is, you know?
Yeah.
And that's why I
So,
keep coming back to Bitcoin because I'm like, man, if you really just want to be safe about it,
but
that's what I
it's
think.
like seductive to a certain extent. And what I mean is it's seductive. I mean, altcoins are seductive, right? So
Yeah.
like the gains you'll get off of just holding Bitcoin in stock market terms are still amazing. Like you're going to blow the
It
stock
really is
water.
comparatively. But to
Yeah.
me, altcoins are almost a way to stack more Bitcoin, if that makes sense.
Yeah. But like the danger with that is like you have to time it correctly, right? You
Yes,
have
I
to have
agree
the
because they're going to be correlated entirely. And so if you just switch in immediately, then they're both going to fall. It will
yeah.
pad it a little bit, but like it'll fall.
Yeah.
Yeah.
No,
You
if you
got to
can
kind
pull the
of pick a
timing off,
time when to
like
be in each one, I think, you know?
yep. And there's certain things you can use to kind of like decide, right? Like what's the Bitcoin dominance doing? Like where are we in relation to the Bitcoin bull market support band, right? These are all things that like have proven over time to be actionable indicators on like whether you should be in altcoins or not in altcoins,
Yeah.
and they will save you a lot of value, like a lot
It'll
of money.
help. What it helps a lot with is looking at the actual volatility of your portfolio itself, it'll keep the swings down in your portfolio if you do that.
100%.
But like, I think what ends up happening is if you're like patient and you bought really low, that you can just price a lot of the altcoins in dollars and kind of come out with the similar result in the end, just by buying them cheap,
Yeah.
you know. And of course, you have to take profits, like you said, which is good, you know. Like it's funny because like my friends come to me and they're like, "Oh, like I might have sold too early or whatever," and I'm like, "Dude, like you sold, like
Yeah.
you made money, and 90% of people are walking out broke, and like,
Yeah.
like don't like, and then like you know, there's that old saying, 90% of people lose 90% of their money in 90 days trading or whatever. It's like, so it's like if you're gonna walk out with like a 30% gain in a couple of days because you bought Bitcoin, it's like, and then it went up another 100%. It's like,
Yeah.
I
No one
know, and
ever
that's
got
gonna
poor
happen
by
over and
taking
over again.
profits.
And in reality,
Yeah.
like I think that's like one of my biggest fears in crypto is because once we see that utility bull run, I don't know if I'm gonna be ready for it. You know what I mean? Like we've seen nothing yet, if that makes
Yeah.
sense.
Yeah.
Um, the amount that like these coins could be used or like actually valued, um, if they were functional. Well, I mean, okay, technically they're functional, but like no enterprise is really. I mean, okay, I know, not no. Look, it's growing. It's growing.
So let's just be honest, man. We're talking about multiple trillion dollar,
Yeah,
multi-trillion
like there's a huge difference
use
between what's
cases
going
and
on in
market cap.
crypto. Yeah,
Yeah.
exactly. Yeah,
So like
it could be 1,000
trillions
times
of
bigger.
dollars, multiple industries. Like when you realize what this thing is capable of, once again, that long-term perspective, like
Yeah,
all you have to do is sit and wait, right?
yeah,
So like, let's say you find somebody who bought Bitcoin in 2017 for $1,000. Do they care if it's sliding down from 69 to 30K? Not so much, because they're in a 30X of profit, right? 30X. You're not going to get that in a lifetime of investing in the stock market, right? Like when you look at
yeah,
your but yeah, like you said before, buying it cheap is the key. So like it's funny that I'm gonna get into the retail investors, please forgive me, man. So like
hmm,
I am a retail investor, and it seems like we are treated as the dumb money. Like that's what we're called, like not to our faces. Cause like in a bear market, retail runs. They run for the hills as everything is sliding downward. They sell. But that's capital preservation. I get it. Now, where they go wrong is when everything is dead and you see on CNBC, Fox News, whatever you're watching, right? Oh, crypto is dead. It's been trading sideways at this super low valuation for 6 months. Maybe you should buy some, right? Like it was that Luna bet, for example, right? I have $6, right? Or whatever your version of
yeah,
$6.
exactly. Like that was
Let
left
me just
over in
throw a little bit
USDC
in there.
somewhere.
Hmm.
When you see the news being that negative about it, like
Yeah, that's a
especially
buy
when there's an
signal.
event like Luna and there's a capitulative actual price action and the price starting to go boom,
Hmm. So
paired
like
with that event, yeah.
retail is busy going to work, grinding, and taking care of their families every single day, that they literally do not have the time to learn financial acumen and manage their own retirement funds or anything like that, or even to speculate on what could be life-changing wealth.
They
So
just
as
hear
a
it on the
result,
news and kind of just get drug along with it.
exactly. Yeah. They become reactionary, right? So like the news basically drives their behavior, and it's like the most powerful elite among us have figured that out, right? So
Yeah, and I've noticed
like,
it's actually not even just for price action of stuff. It's for quite a lot of other anything else they want to say or make you think.
yep.
Even
So
if it's
like,
just like a mood. I
yeah,
think like it's not even sometimes like a specific like idea they want to instill or like even if the idea is like buy XRP or whatever. Even if it's not that, it's like they sometimes just instill like a mood entirely,
no, they
whether it's
can
like
create a narrative,
fear or
right?
something.
Hmm. You can create a narrative using the news, and it just sucks people in, and they disconnect that rational part of their brain that makes them question things, right? So that's what gets retail in trouble. Like they don't take advantage of good opportunities when they're staring them at the face. And like it's
Yep.
really hard to make a profitable trade in crypto if you're waiting till all-time highs to buy, right? Like you're waiting for it to rip up. Like, yeah,
I
like
know. It's like you'd think you'd like they'd look at the charts behind and be like, you know what? This seems to like fall immediately every time it goes parabolic,
mm-hmm.
and then it goes parabolic and they're like, it's different this time, guys. It's the super cycles. You know, have you heard that term before?
Oh yes, I actually questioned if we were in a super cycle or not, right?
Exactly, man. Sometimes you look at that and I'm like, like the way that I was looking at that was like, look at the macroeconomic stuff going around, and I was like, the Fed is starting to try to tighten. You know, like we can watch and see if like if inflation keeps getting out of control and they keep tightening, then like maybe that's a problem. But eventually something's just going to break, and we're not going to have hyperinflationary collapse probably this time, is my guess. But dude, like anything can happen, I guess.
down the road, yeah, like
Down the
after
road, eventually, that's how mathematically the fiat system is designed to collapse, anyways. But
yeah, like, and you got to ask yourself, like, when you price in a 2% inflation rate every year, like you're intentionally inflating your currency every single year, enough years down the road, the thing's going to fall apart. Like the wheels will literally fall off the car in that scenario,
yeah,
right?
yeah.
So I completely agree with you. But like when
Well,
you
the funny
have,
part is about it. Or sorry, you can go ahead.
I was going to
I was gonna
say,
say it's like
but
a
like when you
bingo.
have events where like the Fed literally creates, well, Fed working hand in hand with their government, right? Literally prints trillions of dollars while all the supply chains are broken. And then they're like, oh, we don't expect inflation. Oh, it's there's a little bit of inflation, but it's going to be transitory. Oh, no, this is going to be persistent. Oh, okay, now we have to do something about it. Like, did you see the chain, the pattern, right?
Yes.
And it's like anyone who's aware of monetary theory and
But
proper
talking to people
financial
about it is hard,
laws,
man, because they just
yeah,
like even if I talk to my family about it, they just listen to the
they
news,
glass over. Oh, yeah.
or they're like, but
Yeah.
the supply chains are causing the inflation, and I'm like, they also printed like most of all the money that was created like in all of time like last year. You know that too. That kind of has but but in reality it's a little more complicated than that because they print it as debt, and so like it has to be paid back, and that's going to be very deflationary at some point, and we might be seeing that kind of soon.
Mm-hmm.
But and deflation usually means recession, and yeah,
And that's look what the Fed's trying to do. They're trying to bring us in for a soft landing, right? Like,
they even said they probably can't do it.
mhm. They're literally
And
telling you
a
to your
soft landing is
face.
like an econ term, so like because they want to like not have a recession essentially,
Yep.
and they're like, I don't know if this is possible.
But if you look at the markets, they listen to what the Fed said and they're like, oh, we hear you. We're just going to sell everything and we're going to wait for you to change your stat. You're going to wait for you to change pivot, right?
The
Where you go
market's
from
saying
one
that
to
to them,
the other.
yeah.
And in
Sometimes
the
the market's like
process, it
trying to call
creates a
their bluff for
recession.
sure.
Huh?
Their market's trying to call their bluff sometimes for sure.
Yeah. And that process creates the recession, right? Like the Fed is trying to
Yeah.
use words to control the market versus actual actions, which I get, right? And the
Sometimes that's
market
strong.
doesn't
Sometimes that's
react.
strong enough. You know,
Hmm?
sometimes that's enough.
Yeah.
And in reality, it's a strong tool in his toolbox. But um, all that really I see going on is they're following their Fed funds rate with the or like the treasury yields,
Hmm.
and that's it.
Yeah.
They're just
I
but
just
like
see,
lagging behind it. So
yeah. Like I think, like I said before, I think we're both in agreements on this. Sooner or later, like the Fed is going to turn the money printer back on again, right? Um, and what is very important is where you're allocated when that happens or shortly after that happens, right? Because that's going
yeah,
to be the bottom, whether it's the
yeah.
bottom of a recession or whether it's the bottom of whatever we're in now in the stock
Historically,
market.
so far, yeah, that's
Yeah. And which asset is likely to explode in value the fastest? You think it's
probably the
gold?
cryptos. You think it's gold this time?
No, I'm joking. I was saying, like, no, it's not going to be gold. It's going to be crypto, right?
Okay.
It's going to be
So
Bitcoin.
I was like, wait, is something new this time, or is something going? Because it's like I knew they were talking about gold like
Yeah, no.
a couple of months
I'm
ago,
wearing
and
the
I was
Bitcoin
like,
I told you so shirt. Like, bro, it's definitely going to be Bitcoin,
you're
right?
sitting there, really, you got me straight up,
Mhm.
man, dude.
Nice.
But like, it makes me wonder though, because it's like at the same. Do you remember when gold was in the news, like a couple of months ago, whatever, because of the whole Russia and all that stuff was going on?
Hmm. There's also challenging all-time highs too, right? Like,
Exactly. And now it's not anymore. And it was in the news, kind of like they were trying to pump exit liquidity out at the exact mark.
you get it, man. Yeah. So it's like, oh my God. So like I've owned gold coins, right? Like just things that are printed by the oh, I can't remember, not the Fed, but like the international, like the US mint basically, right? And I sold them all right at the beginning of 2020 for Bitcoin and Ethereum, right? Because I was like, which one of these two assets is going to go up the fastest, right? Like we have Bitcoin and crypto and what's obviously a bull market, right? And then we have gold that's basically been trading slightly upwards and it's already at a low point for like years now. I'm going to put my money in a smaller asset that can explode in value the fastest once it gets any kind of liquidity, basically.
Yeah, even by market cap, people don't like to use market cap as a structure, but it kind of makes sense,
Yeah. And it's absolutely useful in this scenario, right? Because you can't print any more Bitcoins. You're not going to be more than 21 million Bitcoins in that scenario. So like, it's basically like an elephant trying to squeeze into a thong. The price has to explode outward to accommodate the liquidity, everything else like that. So I know that wasn't a proper, that wasn't a politically correct thing to say, but like, that's basically what you're working with, right? That's why the thing can shoot up in value so much. So back to the point of like, when the Fed pivots, you want to be positioned in the assets that are going to move the most, basically, right? And then you're going to have to also figure out when are you going to take profits, because that's what gets that's the other thing that nails retail, right? They'll sit there and ride a coin up, 2,000% and not sell a single penny because I think it's going to go another 2,000%. Well, at some point you got to think like, how much risk am I willing to accept here? Am I willing to risk, this $600,000 on the chance that it's going to turn into 2 million, right?
Right.
What are the odds, right? Like what is the market cap going to be at 2 million? Something insane. It's never going to happen, right? But retail doesn't understand the metrics they need to pay attention to, whether it be market cap, liquidity, all that stuff. They're just looking at a number go up on the screen and they haven't been taught. They haven't been educated, which is why they call us the dumb money. But it's also a chance to, like I said before, on the long end, like once education rolls out there, once we can inform the masses, it does give them a great way to protect their wealth, and it gives them a great way to earn life-changing wealth if they're willing to deal with, I would argue, 2 cycles is all you really need, like judging from my own personal experience. So like I went into Bitcoin, it was $15,000, it crashed down to $3,000. At $7,000, I literally pulled money out of my Roth IRA, right? And bought Bitcoin at $7,000.
Yeah.
And I bought ETH at like 230, 260. I can't remember is when I started buying ETH up, and I stopped at about 600. Yeah. Life-changing wealth, right? Like that gave me the working capital to like literally quit my job and go into DeFi and pay attention to how much.
Well, what kind of DeFi stuff are you into now that you're not into the UST thing anymore? Are you still using that pool, or just like, okay.
I'm out. So I managed to exit UST and Luna, and I took about a 40% loss, right?
But you were in a like a 4 pool or something, not the 4 pool, but like you were in some kind of a pool that had UST in it, right?
No, I was actually an Anchor, man. So
okay, just straight up Anchor. Okay.
And then I take that back. I was also in Platypus as well, and that's what screwed me because I wasn't paying attention to I wasn't paying attention to my UST and Terra ecosystem. How should I put this? Exposure, right? Like I didn't have that properly calculated. I had them separated in my head so that when that whole ecosystem started to crumble, I had to go to like 3 different places, pool funds in one place, and then trade them to get out. And that costed me money, right? Because there's a lot more actions I needed to take to get out.
And that took time basically. And in the meantime,
it's basically doing this sine wave to death, basically, is what it was doing. So like when I realized it was a problem, I think I told you earlier on, it was at like 95 cents. And I was like, no, that's all right. And then I think it dropped to like 29 cents that night. And then you could see all the venture capital and market makers just pouring money into this thing, trying to get it back up to the curb. And it got up to like 89 cents the next day. And I'm like, Yeah, they didn't restore peg. That's not good. I need to get out. And I think there's maybe one more night, or I think it was that later on that day, like I waited for it to get to 79 cents because it dropped down to 50 again.
Yeah.
And then I waited for it to get to 70 cents, and I just basically got everything together and I hit sell to get out. So that was my UST exposure. So like I had Luna, but I'd sold that like weeks before into UST and I had it sitting in Anchor. And then I had UST also in the Avalanche ecosystem sitting in a protocol called Platypus. I don't know if you've ever heard of that one before.
I mean, I remember you told me about it at one point, but there's so many protocols that I've been looking at lately that like I don't even think I've seen the app of that one.
Yeah, like that's the thing about the space. It's so big, one person can't pay attention to it all. Like you.
Well, that's what I was going to ask you. Since like, have you used the GMX thing that you showed me?
Oh yeah, I have a position in that right now.
So do you stake in that at all? Because I want to show people that.
All right, cool. So let me go ahead and pull up. So if you go to gmxil.io or whatever, let me grab this. So when you bring it up,
do you personally stake in it? Is what I mean.
Yes, definitely. So that's actually all I use it for. So like, there's the GMX token that you can buy. And the way that works is you get 30% of the profits from all chains it's involved in. So right now it's on Arbitrum and it's on Avalanche. And basically it's
the
more
trading fees is what you get?
Huh?
What? You get the trading fees?
Yeah. You also get, you get trading fees, and you also get a portion of the profits when people lose on their trades. So do you remember earlier on when you said 90% of people lose 90% of their money?
Yeah, wait a minute. So wait, how does it have like a treasury or something that backs it, or
yeah,
and then
there's
just
a treasury that backs it. Yeah. So like,
I like this, man. That's pretty cool. Thanks for showing me. So does it have like a hard cap on the amount of tokens that are going to be made?
Yep.
Wow, man. Okay.
Hard cap is like 13 or 15 million total. It's not a lot, right? Versus like Cardano, which is like billions. Right. Also, like there are some pretty sticky tokenomics they created. So like the protocol rewards GMX stakers the longer you're in there, right? So you get these cool things called multiplier points. After you hit a certain amount of capital, you can generate multiple multiplier points in a day, and it actually increases your ETH yield basically, right? Because it pays you in ETH, not necessarily straight up GMX tokens, right?
Okay. But it's a percentage of the value of the GMX tokens that you hold at the time.
Right? My portfolio? Let me go look at that real quick.
Well, it gives you like the rewards are probably a percentage of the portfolio, right? At whatever time the snapshot is giving you.
Yeah, the rewards change every week on Wednesday, and it really just depends on the trading volume of the previous week. So like, let's say hypothetically they generated $16 million of revenue. They'll then take 30% of that and give it to GMX stakers. And then the other 70% goes into the GLP stakers, basically, right? So that's the other way. So like you're buying GMX, the token, that's like your faith in the protocol itself. They also have another token called GLP, which is basically you providing liquidity to the GMX trading platform itself. And you get 70% of the weekly profits from that particular chain. So if you're an
Arbitrum, do you deposit GMX and then is it kind of like bonded? GLP. Well, but you get the GLP by depositing GMX?
No, you have to buy GLP separately.
Okay.
So basically you're becoming the liquidity provider, letting people jump in and out of trades on GMX. And you get rewarded nicely for that. So like what you saw earlier on last week, it was like a 40% APR, right? Partially that's partially in ETH and partially in ES GMX, like escrow GMX. The thing about it is it takes a year for the escrow GMX to vest. Most people aren't going to take the time to do that. So really you're getting paid money that you're probably not ever going to take out of the system, right? And that's one of the ways that like it gets really sticky because you're incentivized to hold it there longer to generate like actual
So when
real
it says
GMX over time.
ESGMX, that must be the escrowed GMX.
Yep.
But that doesn't exist like as a token that represents
Mm,
it, does it?
I mean, it exists as a token, but you can't sell it. Like you can't transfer it out of your wallet.
Okay.
Does that make sense?
Okay.
So like, I definitely advise anyone who's really curious about it to look into it because it seems like it's going to survive, right? Like,
Yeah. You know what's
I did.
funny though? You know what Luna
Mhm.
had? You know, part of its collapse thing, it was so highly leveraged that you could take stuff like the equivalent of this escrowed GMX and you could put it as collateral for something else for
Yeah,
more. Yeah.
yeah. So the thing about this is, I don't see this thing imploding like Luna because,
No,
like,
of course not. I mean, like this is running on like Avalanche. Like the worst that could happen to this is that like people don't care about Avalanche.
yeah, Avalanche and Arbitrum, and they're looking to expand into other chains as well. Like,
Yeah, and
but
Arbitrum, yeah, even Arbitrum itself is good because like people are gonna like so people are wondering if scaling solutions are gonna have a use case if Ethereum 2.0 comes out and Ethereum gets faster. I'm gonna say yeah, like you want stuff to be even faster. What do you mean? You know what I'm saying? So
and
like
cheaper.
Arbitrum, yeah, and cheaper. Arbitrum on Ethereum 2.0 would be even more amazing. So like, what do you mean?
Yeah.
That's how I'm seeing it.
So when I first started using Arbitrum to do a claim, like on GMX, costed like $4, and that was, I don't know, 3 months ago maybe. How much is it to do a claim now? Like anywhere from 40 to 60 cents. Like you're looking at that much of reduction in fees. And it's like instantaneous. There's no waiting. There's no
Well, even
waiting. There's no
$4
paperwork.
isn't even
The
that
block's
bad.
not.
I've seen people pay up to like $40 or more to like
Oh,
claim
I've paid
rewards.
hundreds for a
Oh
transaction.
yeah.
Hundreds.
Well,
Yeah.
for the transactions, all of it, yeah, but like they cost different depending on the amount of fees, and sometimes withdrawing isn't as much, but it's still like it's still some. It's usually it's more than the reward itself, and like
Yeah.
it's definitely going to be eating into a significant amount of the APY unless you're putting like a million.
Yeah. So if you're not a whale, like if you're not coming with a minimum of $10,000, $15,000, like it's almost not worth transacting on Ethereum right now, right? And it's calming down. Like as this bear market really takes hold, the transaction fees drop, right? To where like normal people can play in the space, but normal people have already ran away,
Yeah.
right? So it's like the DeFi natives like me and you, like we'll play on the layer one ETH, right? But like when things are hot, like when people are starting to FOMO back into the market,
Yeah.
you need to have size to get into ETH. And if you look at it, most of the innovation up until about, let's say 6 months ago, it was all happening on Ethereum. Like Bitcoin was doing its own thing, but that was on like layer twos, like Lightning, basically to make
Yeah.
Bitcoin usable.
Now I'm watching the innovation happen as people copy the innovation from Ethereum onto other stuff. You know what I think is actually really interesting? There's one called Yieldly. I need to look more into the tokenomics and stuff and see if the coin is actually decent to buy. But like, uh, the project is like run by Algorand. You know what I mean? So it's like the official DeFi platform and like entire DeFi space of like Algorand is like
Mhm.
Yieldly. So it seems like a really interesting bet for me to look at.
Oh,
But I was actually wondering, do you okay? I was looking at Optimism before because I wanted to use it, but it takes like a week to actually like, you know what I mean?
to
To
bridge
get
funds
your
over. Yeah.
yeah. So does
I haven't
Arbitrum have
messed
like a
with
waiting period
Omni.
too?
Huh?
Does Arbitrum have a waiting period as well?
No, like you're gonna wait like tops 3 minutes.
Okay.
There is no like that's the reason I haven't messed with our optimism at all. Because like most
Right.
people aren't gonna do that, right? Like
Right.
we want instant gratification
Yeah.
in our future, right? So
Does that
like
mean the Arbitrum is a little bit more expensive to run on, or are the fees worse or cheaper? Or
I actually haven't done anything on optimism, so I can't compare it. But like
yeah,
I said before, like the fees are coming down massively, like by a order of magnitude, literally. So
yeah.
like, and it's going to keep getting cheaper as they keep moving forward in their roadmap. So
In
like,
the Arbitrum one?
100%.
Okay. And does
So
it come
like,
with a coin, or are they making a coin yet?
that's the rumor, right? So Optimism rolled out their coin, right? And they're
Oh,
gonna
it's
release.
out. Yeah, I was following it. I didn't even hear the news. It's funny, man.
I don't think it's
But
out
like,
yet, but
oh, okay.
they've created like if you do these things, you'll get a portion of the airdrop, right?
Oh, okay. I
Um,
should look it up.
and it's basically been confirmed that Arbitrum is going to do that as well. And at this point in the cycle, people are going to take that coin and they're going to sell it like immediately. Like they're not going to keep that for 5 years like it was a Bitcoin or Ethereum. Like it's just going to be instant liquidity that they can add to their positions. We were talking about your belief, like you kind of believe Bitcoin is the way, right? Ethereum is the way.
Not even Ethereum, man. I mean, literally I think if just from an investment perspective, especially for the least amount of management, you know what I mean? Especially because altcoins will go up 2,000% and then fall 90% and average around not, like probably like if you're just going to hold these things long term, Bitcoin is just the one, unless you want to keep trying to time everything and do everything. If you want to actually, but the problem is everything that you do that tries to outperform Bitcoin, I say good luck. I'm gonna try to do it a little bit, but I say good luck, man.
Yeah.
That's pretty much it.
So to me, I'm kind of learning when to pop in and out of the markets, right? So
Yeah.
when I said the bull market support band, are you familiar with what I'm talking about? I guess I wanted to just touch on one deal. Like
Bitcoin thing?
I'm no longer really interested in trying to basically, with me, my mindset has changed from just hold Bitcoin and Ethereum, right? Because while my working capital was increasing over time, like it wasn't really affecting my lifestyle, right? Like I started to change my mindset to more of a short-term mindset, which is super dangerous. You don't want to do that ever. But due to life situations, I just didn't.
But that's what altcoins will do, I think, because you'll buy them and be like, this thing is going to go up 1,000%. And you wait a year and you're like,
did not go.
It's going to go up 1,000% though. It's still going to go up. And then
in fact, I'm underwater now. In fact,
it's down 75%.
Yeah. So what I'm kind of looking at now is with the advent of DeFi, and DeFi is not going away. Like, how can I start using my portfolio to generate actual yield? Like, can I consistently start generating an income from crypto, even in bear markets, right? And it seems like the answer is yes. And
with DeFi?
Yeah. And but you have to have enough working capital, though. That's the one thing that I have to that's the one caveat, right? And you have to do due diligence not to end up in a
Well, what do you do to make the income stable then, other than just stable coins? Because if you're going to be staking anything else, you're going to be experiencing the volatility of that coin.
You can't get away from the volatility. It's always going to be there, right? The point is to have enough invested to where even at the worst of the volatility, your bills are still going to get paid, basically. I wanted to use a fancier word for that, but your commitments, all the things you need to do, your rent, your car, insurance,
your
medical,
debt obligations can be met.
Hmm?
The debt obligations can be met, basically.
Exactly. Make sure you service your debt obligations. That's what I was looking for initially. So the key is to make sure you're in a place to where if the worst happens, you're still okay. You can still service your debts, right? So for me, I'm not at a place where I can do that purely with crypto. I'm going to have to go back to the fiat mines and work a job, which is cool.
Fiat mines, it's so funny. I like that.
Yes.
It's
hilarious, man. But at one point I was generating $3K a month and my normal income was around 2,200. No, I'm sorry, not 3K a month, 3K bi-weekly. And my normal income was about 21, 22.
Right. So crypto was outperforming at the time, but it was being supported by this Luna fiasco and everything,
Yep.
So yeah, I mean, the thing is though, in markets, if you're going to be trying to offload the risk of the volatility, you're going to be getting less yield. Exactly. But at the same time, though, that can sometimes be better for, the debt payments, if that makes sense. Yeah. And also you can use a combination of a little bit of DeFi with the actual holding of the token, because it can pad your portfolio. Because even though if you stake, there's going to be impermanent loss, meaning you won't get the full gains of the actual mooning of the coin. On the bottom end, it'll also pad your portfolio.
Yeah.
It's just impermanent loss.
But even with the staking now, you have single-sided staking where there is no impermanent loss, right? So with GMX, there is no impermanent loss, right? There's automated trading strategies that are
Do
coming
they
out.
have dual-sided staking on that at all, or is it just single?
It's basically just single. So like, well, GMX is just pure GMX. So like you're you're just interacting in that same asset. There's no second pair. There's no second asset that you're going against, right? Because that's what causes the impermanent loss, like the difference between the two assets.
Yeah.
Um,
But like, but this thing is a futures system.
Say
So
again.
this thing is a futures trading system.
It's more than that. So like, it's also like, let's call it a swapping system as well. So like OpenSea, like which is a giant stablecoin swap system, the giant stablecoin aggregator, it routes through GMX. Paraswap routes through GMX. One inch swap routes through GMX because they have no slippage trades, right?
Because they're futures, that's why.
And then also you're getting fees for them swapping through GMX. So like that's still another source of revenue that's coming in. And they're looking to partner with more DEXs and more exchanges. So because they have the assets on hand, right? Like if you look at the GMX GLP basket, because it's really a basket of several assets, like 5, and it's 50% stable coins, right?
Yeah, I'm looking at that.
GLP, it's not a stable coin itself, but it mutes volatility basically. So like even in this down only market, like you're not going to get ripped nearly as badly, and you're collecting the gas token. So on Arbitrum, it's Ethereum, but on Avalanche, it's AVAX basically, right? So like you're not inflating away your token base at all. You're not. Basically, it's a pretty well thought out thing. I was going to tell you about Umami too, but that's more of a speculative bet. So
totally, dude, I have some speculative bets out there like X Punks that I'm looking at right now. Don't think people are going to be hyping that. Yeah. You know, it's funny. I downloaded the data sheet from DeFi Llama about GMX, and I'm trying to look for.
I would say look at Convex too if you want actual. Basically a giant flywheel of yield. Like that's what I would describe Curve and Convex as. And like that Umami deal is trying to be like a Convex of GMX basically, right? So like they're using the traders and doing delta neutral strategies to create yield. So like as long as the markets are trading sideways like they are right now, in between like fear drops, right? Like you're pretty much guaranteed to generate yield, right?
Because there's so little price swingage. Like, wait, because of the why again? Sorry, I was reading something else.
No worries.
I thought the impermanent loss. Is that what you're saying?
I'm talking about like there are real structured products like the GMX that I'm talking about, and there's other very similar projects to GMX that are out there, because anything that's successful will get forked to a different chain. That's just the way it is.
Right. Well, this kind of looks like it's you know what synthetics is?
Yeah, 100%.
Yeah, this kind of looks like the synthetics of Avalanche is what I'm saying.
Yeah.
Right. I think they moved it over to Quinta.io, but that's what it is now.
Yeah. So basically we're entering a point where like DeFi is starting to get like real roots and things that aren't just pure hype. Like there's actually a service that produces it's a business. It's a straight up business basically, right? That generates real revenue. And people are figuring out how to build businesses on top of that, like DeFi Legos. Have you ever heard that term?
Module structures, putting them on top so they interconnect and everything.
Yep. So people are figuring out how to create businesses that create yield and create yield or sustainable revenue on top of another business, basically. So then you have like this synergistic deal where everyone's incentives are aligned, and it generates yield indefinitely, right? So instead of just buying something and hoping it goes up with time, you're buying something and it's creating a second or third revenue stream for you, and that's basically what I'm looking at. And as long as the thing is like innovative and not a Ponzi, that's the key, not a Ponzi. There's lots of those in crypto. It shouldn't go away. And the longer it exists, then you get that lendiness effect, like Bitcoin, right? Like it's so entrenched. It creates such a moat on the rest of the crypto space it's going to be a long time before Bitcoin really gets passed by anything other than maybe Ethereum.
Yeah. Well, when you think about it, though, I wonder what the kind of next hype cycle will be. Because okay, think about it like cycles and cycles ago. Well, okay. Let's go back one cycle. It was DeFi basically. That was like the big deal, right? And I guess some NFT stuff. But like the idea is like the stuff that was really growing on the Ethereum blockchain that developers are looking at and actually copying over to other blockchains is going to be the DeFi stuff, and that's huge. And all sorts of developments have been made and stuff has been invented and experimented with and blah blah blah. That's all out there. Before that, cycles ago, the coins were way different. Coins were like you were saying, feather coin and stuff. Everything was like just some kind of offshoot of Bitcoin, like a fork of Bitcoin. Everything was just a fork of Bitcoin. And like I remember there were some coins back then, like their whole thing was like their entire idea was that their tokenomics would make them valuable in the future, which is like you're saying, basically just the seashells or a Ponzi scheme or whatever. They have no use case. Like it's not like they were the first Bitcoin or like the first crypto so that they actually are traded against coins and have a demand for them or anything, or have a name or anything. They're just there and they're another Bitcoin, but have like less coins or fewer coins. Like I saw one that was called like sub 1x coin or something. And it was basically like there's only half a coin in existence.
Yeah.
But it can be divided however many times. Actually, I was looking at it. It's actually more divisible than the amount of times that you can divide Bitcoin up. So it's like technically the amount of base units is even more. So like
effectively
the
it's
whole
the same
thing.
Yeah. It's just
So
fooling
what I'm
people
wondering,
think it's deflationary, right?
exactly. That's the kind of stuff they were playing off of back then. And of course, it still can be traded. So like someone may profit, you know. But like what I'm wondering is if that was the cycle hype, and then like now this is the cycle hype of the DeFi. Like I wonder if next cycle hype. I'm guessing someone's thinking out there like it's going to be the ISO coins. That's going to be the next hype. So like, have you ever heard of like ISO 222? I believe the number is. It's like this standard of banking payments for companies worldwide, and it's like a new kind of actual infrastructure, or not infrastructure, but it's like a new standard that's being rolled out, and it's for compliance basically in the banking industry. And there's a couple of cryptos whose foundations are compliant in that regard. So people are looking at these cryptos and seeing how they're kind of related to like the World Economic Forum and that kind of stuff, because they've even released documents about like I think I've even seen Solana and Celo, Cardano, probably Ethereum on it. I think IOTA, Algorand. There's a couple of like these are classified as like. Actually, I don't remember if Solana is, but I'll have
like
to look.
The newer layer ones, basically. So
yeah,
like
they are. Yeah, and each one of them have like their kind of like own specific niche use case or like things that they're better at or whatever. But they all interconnect with each other, and then if you can see this web of like the companies that interact with each other and the coins that will do each part of the system, you know, and like in reality, when you look at it, like the web, it's like the heart of the web is like XRP in the middle. That's the coolest part, because it's like everything will trade via XRP as the bridge currency, like between all those, you know. And but like what I'm wondering is like, man, like that's why we've been saying the Great Reset stuff in the news and everything, is because what it would take to actually get that system into fruition and seen in reality is going to be that kind of like crazy collapse.
Event of the a hyperinflationary event of the global world currency, right?
Yeah, like, something like that.
That's basically it. Like, or like there gets to be a massive deflationary recession because they didn't inflate the currency away, right?
Yeah.
That those two scenarios basically are how you get something like that. Because like it's going to be very painful. There's going to be multiple generations of people who won't be smart enough or won't be educated enough, should I say, to use that, whatever it is, right? Because it's going to be purely digital, 100% trackable.
Yeah. And so what I'm thinking is during the time that happens, exchanges are pretty much going to be offline. Maybe you can use some DeFi exchanges and that'll kind of protect you and stuff. But like, I'm thinking that like, think about this, like the market upsets the most amount of people possible all the time. And the best way to do that in this case would be for these coins that are going to be like I said earlier, like they have no actual utility value baked in compared to their potential. Like it's all speculative. But as soon as it actually goes to a utility bull run, like one of my main worries in crypto is like actually missing out on that utility bull run, because I think I'm being smart selling at the top or something. or like selling somewhere. And
That's why you keep a moon
then
bag.
exactly, you keep a moon bag. Like I'm but the thing is, you have to be really picky about the cryptos that you moon bag, because um I tell people, like, I'm willing to ride these into the ground, like, if necessary, because of the potential alone of what it could be. Because I
Yeah.
don't think because think about it, like, we probably wouldn't have access to the exchanges to be able to buy the coins during the times that they're flying, because like the whole financial system would be offline. Like, you wouldn't be able to use a debit card to do it or something. So,
Unless you
like,
already had money on chain somewhere, right?
I
So like,
guess on chain is the way. It's the way,
yeah.
right? And that's why I've been using some more of the XRP DeFi stuff. I don't know if you've
Mhm.
ever used that stuff before, but it's like,
I'm probably gonna end up doing it because like one thing about me is like before I recommend anything to anyone else, it's because I've done it myself. Like I have skin in the game. I'm aware of the risk, and if it's to the point where I feel comfortable recommending it to somebody, it's probably safe, right?
yeah,
It's
because you've
crypto,
used
so
it, you know how to
smart
do it.
contracts, exploits, and hacks can always happen, right?
Yeah.
But to the best of my knowledge and my due diligence, yeah, I think it's going to be okay. So like, that's one thing. Like, if someone says, "Hey, you should take a look at this," I'm probably gonna make a new wallet, do whatever I need to, hop on whatever exchange I need to, and go play with the thing and just see how I feel about it.
You can do it actually from the iPad if you don't have. Do you have the XM wallet for
Mm-mm.
XRP? So that's the one that I would use because it's really, really clean interface and really easy to use, and it connects with everything. And there's a lot of stuff nowadays that will connect to it and like automatically add trust lines with a QR code. So it's very useful. Um, you might be able to do that with other apps, but I'm not even sure because I just use this thing because it's so nice.
Yeah.
It even has a built-in DEX, has a built-in swapping feature, has a built-in token creator, has a built-in escrow feature, has like all sorts of stuff that are really cool, and they keep adding more. Um, and it's great. You can actually access it from my site too. It's under the wallet section. Uh,
Okay.
yeah,
Yeah, I'll
that's what
probably
I would
hop
do.
on there and do that.
And then something that you can do as well under the resources side, it's like I added new things like data and resources or something, or resources and data. But at the bottom section is like resources. In the top section is like some charts and data. But the resources that I just added include links to some trust lines. And if there are other ones in the future, like for example, like the first one just shows how to install or how to give you the Sologenic trust line, but it gives you like a method of how to do it, and like while you're doing that method you can see how to do a couple of other coins because they'll show up on a list as well. But then I also give like a link of like an actual trust line or two, because you can add them manually without having them on a list. And I'll
Yeah, I
probably
can
add
play
more
with
over
them.
time as well.
Yeah.
But basically trust lines are like tokens for XRP. So like
Okay.
that's how they run on it, because they're almost like a debt debt token. It's because the idea is that you can use them to like to trade something else that it represents something on the ledger. So like
Yeah.
you can issue them as like I hold an ounce of gold and I'll give you this token
Hmm.
for it. So they're really IOUs. But the point is they're still just tokens, so you can send them around. So that's what people are using them now for.
Okay. That is DeFi. That is the nature of DeFi. Like
Well,
lending
the
money.
real DeFi, actual where it begins to be DeFi, is like there's a DEX. You know, um, I think in development right now, the main thing people are trying to get into XRP is like staking and that kind of like looped liquidity that sucks in a ton of money for the passive yield kind of thing. There's a lot of stuff being developed for that right now. One of them, Corium, that's going to be like that's actually a layer one thing, but it's like highly involved the with XRP and Sologenic and other stuff like that. Another
Yeah.
thing is going to be Flare networks, or Spark token, Flare
Yeah, I've heard
network
of
maybe.
those.
Yeah, so that's going to be like that's technically they said they were going to have their airdrop a while ago, but it's been we're still waiting. But I'm pretty hopeful about it because I know the system's going to be really really good. For example, there's a lot of stuff in Luna that Luna did that seems kind of I don't know how to put it. Like it's really, really, really looped, highly leveraged liquidity of like Luna couldn't handle it though, was the problem, because it had the whole problem with its blockchain in the background with the inflation. But like these other blockchains can handle it. So once you have this like what I was telling you earlier, so like you could like take that escrow GMX and then like, but it actually exists as a token and that represents something else in the background, and this increases in value, and you can actually take it and use it as collateral somewhere else and then get paid, and then like or borrow it, like that
Yeah,
kind
they
of.
basically create a wrapper that you can trade and do whatever with.
Exactly.
Yeah.
So the cool thing about that is like they're doing that kind of stuff on Flare networks, and so like they're going to be adding that kind of value to XRP, which right now it doesn't have. And I'm noticing that like that not only brings in a lot of value because people want the passive income, but it also traps a lot of value
Yeah.
because it people lock it in there and don't sell. And like that's like really, really good for price action. So if people are like using XRP and stuff like that for like actual DeFi use cases, right now it doesn't have any. Like imagine what it can do is what I'm looking at. Right?
Yeah. So as far as like the catalyst for the next bull run,
Mm,
there's no way to know what it's going to be, man. You really don't know. So like we can speculate, hey, like when the Fed pivots, it's game on. In which case, all the things that have been building and shipping and developing a following in the bear market, those things are going to go. They're just going to go up a lot in value. There's no way to get around that, right? But let's say hypothetically, this turns out to be a prolonged bear market that takes years to play out. Well, then
yeah.
the next catalyst is not going to be something that we're looking at right now. And that's when I think those ISO coins, or what you were just talking about with XRP, plays a much greater factor in that, because clearly they are shipping, clearly they are delivering their product as they claim they are. And that's what you do in a bear market to really gain a following of trusted people that will actually invest in your product. So
Yeah.
like, I
I
just
call it
think,
like a base level or base layer of demand.
yeah, you
That's
have
why
to
they
have
almost trade as commodities in the way that they come back over and over. You know?
that. Because like, how should I put this? This is something I tell people that are new. Like, if a company goes down 99% in value, like if their stock literally drops 99%, there's a high probability that company will not be in existence in a year, right? Like it just
Yeah.
goes away. They go bankrupt, they fire all the leadership, and they sell off the assets, right? Crypto does that regularly. Like you've been through a couple bear markets now. So you know, like if you hold an altcoin, it can literally go down 99% from the top. And then if it's a good project, if it's a good company, it will come back, right? Like it
Yeah.
will generate
Some of
value.
them. 99 is a little extreme. 95 is a little more like it. But
Yeah,
like
like
I think
Ethereum
it's
dropped
possible.
95%, right?
Yeah.
Like ETH, like the number one altcoin, I don't even consider it an altcoin anymore, right? Drops
Yeah.
95 in
Well, in
value.
fact, like it's almost so little of a, like not it's not so little, but like it's such not an altcoin that
Yeah.
you have to measure it separately when you're doing the market cap dominance, because you can be like you can look at the total one, total two, or total three market cap, which will include everything or excluding Ethereum or excluding Bitcoin and Ethereum,
Yeah.
because it's like you gotta.
And
Yeah.
I would challenge, well, back to the point. Let me do this real quick.
Sure.
Holding altcoins is dangerous in a bear market because
Yeah.
like they can drop so much, but they can come back because they're not true Ponzi's, right? There's no fraud. You're not promising anybody
Yeah.
guaranteed dollars in their bank account. So like it's just a different type of system, and that throws people for a loop. So they'll look at something that drops 82% in a bear and they're like, it's dead, I'm selling, I'm out. No, that's when you should be buying more if it's a really good project, right? Like that's the instinct that retail has, is just to leave when things go down.
Yeah.
And then
Like
also,
if the fundamentals don't change, then like all
yeah,
it's changed
exactly.
the sentiment. Then
If the thesis doesn't actually change, right? Like if they're following their valid, thought out process and it's still shipping and it's still working, probably going to be okay. Um, Unless they just run out of money, which happens, or like something, an exploit or something comes around, right? Um, Lastly, as far as like how we think of markets, I actually think we're not doing it right anymore. So like everyone looks at the Bitcoin dominance, and that used to work right up until Tether really took hold, right? And now everyone, how should I put this? Like in a bear market previous to stablecoins, everybody ran to Bitcoin, right? Because it was the most stable one. It was going to bleed the least out of everything, right? And there was no safe harbor. You either cashed out or you went to Bitcoin.
Yeah.
Now we have stable coins, and like the market is still focused on Bitcoin dominance hardcore. And I mean, I think that definitely has a role in everything, and it's going to be a big role. But as stable coins become more prolific, and you know you're in a bear market or market's going to drop 70% from where you think it's going to be at, why the shit would you go to Bitcoin, right? You would go to a stable coin. But we're not measuring stablecoin market caps that much. There is no stablecoin dominance. Like no one pays attention to that. And I'm like, but why though? Like,
well,
like,
there's graphs of it, and you can see, and it's like you're saying, it's Tether basically, but like because the other ones are so small. Basically, like the graph of them over time shows like Tether being huge, and then all of them down here.
Yeah, like up and to the right, because like everyone wants that stable stability. Everyone wants to protect their capital gains, right? Like, and that's the best way to do it is going to a dollar-like asset if you're not actually going to dollars and leaving the space. And it gives you the ability to hop back in the market way faster. Because if you transfer money into Coinbase, you're going to spend days waiting for it to
7
clear.
days to be able to send it out. Yeah,
exactly. If you're already in Tether or USDC or whatever your GUSD, you can hop in the market instantaneously. So like, I think people are getting it wrong. Like if you're looking at it from like a bear market percentage, you need to check the stablecoin dominance, and you also need to check the altcoin and Ethereum dominance as well. But like, there's not a lot of talk of the stablecoin dominance because over time, as these stablecoins become more prolific and they start sucking up more and more market cap, that's coming out of Bitcoin, right? It's coming out of Ethereum. So like these two, basically the king and queen of the space are losing market share to these other assets, right?
Well, does it have to though? Because think about DAI and the way that it's produced as almost like a banknote, where basically it has like it's over collateralized by ETH. Every DAI requires ETH to be bought, and actually more ETH to be bought because it's like
because it's over collateralized.
Yeah, and you have to like pay like some interest to get your loan back.
Yeah.
So like that's actually good for it, isn't it?
Yeah, it's good for ETH. I agree. And over collateralized stablecoins are the way for now. I think there's going to be a point in time when governments are like, we're going to roll out our own thing. All these other stablecoins need to go away right now. And that's when it's going to become the algo stablecoin time, right? Like Terra came too early and they had the reverse. They started wrong, basically. Their plan was to.
Why would it be algo if it's the government doing it? They'd probably just switch USDC over to be a CBDC. You know what I mean?
No, I mean, like the government is going to take over USDC, right? Like they would just nationalize that company, right? Because they're doing it already.
Yeah. And they're also USDC's running on XRP ledger and Lumens and stuff like that. So it's already ready for enterprise use.
Yep. All the other ones though, right? The non-government approved stablecoins, I'm saying the governments may attack those, right? Like the G7, G15, they're like, nope, we're gonna take these off the market. Because you saw what happened to privacy coins, right? Like in about 2 years, all the privacy coins were just off. They got delisted. Like they're purely like almost a black market thing, unless it's Monero, which is owned by the Digital Currency Group, we'll talk about that later. So I think there's going to be a point when that happens. And if you're a stable coin that's not one of the chosen, they're just going to go after your real world assets. And now all of a sudden you're not backed with anything, right? So I think that's when people are going to go, I'll go stable coin with on-chain assets like Frax. Like I think Frax is doing it correctly. Have you ever heard of
Frax can collapse like Luna?
No, not
because it's 75.
Huh?
Yeah. Because it's 75% collateralized. Do you think that's enough?
Yeah, they're moving to 100% backed, and then also like
how can it be Frax if it's 100%?
Yeah, so it's not Frax if it's 100% backed currently, but like with the way it's set up, you can't blacklist any of the wallet addresses, right? Because like they don't actually hold anything in wallets; they're all in pools with other people's money commingled. So like, unless you go after the protocol that's pooling the money, which would also hurt USDC and all these other ones, USDT, you can't effectively go after them. Frax knew that when they set it up, right? So like that's how I think it.
You mean like from a
survived
regulatory
life.
standpoint?
Yeah, from a regulator standpoint.
What about just like from a whale dumping standpoint?
Still no, because if it's 100% backed, like there's going to be assets to back up the needed
So
liquidity.
it's not. So they're switching it over to be 100% backed. I mean, that's kind of interesting. I wonder if they're doing
for.
that because of the Luna thing.
Yeah, I think honestly, partially collateralized got a really bad rap with Luna and UST. So they're just pivoting to the going to 100% back, and as
and still calling it Frax, even though that's short for fractional reserve.
Yep.
That's fine. And whatever.
As Faith comes back in algo stablecoins, right, they'll decrease it because it was 75, 85% backed, and then Frax was making up the other 15%. Frax shares was making up the other 15%. But they're going about it the correct way, where like if some whale market dumps $1 billion of Frax has the ability to keep peg at all cost, and UST did not have that, right?
Yeah.
So UST grew faster than the market cap of Luna, and that was a huge problem because like as Luna gets sacrificed to protect UST, there's going to be X amount of debt that's not covered by Luna, and then what are you going to do? Who pays for that debt? You either go beg your market makers, jump 3AC, 16AZ, 3 arrows, whoever. Hey, can you give us X amount of billions of dollars to cover this debt? Well, they all went broke trying to protect the peg. So there's no one to cover the debt. UST dies.
Yeah.
Frax, on the other hand, is coming from, hey, let's grow sustainably. If someone market dumps our coin, we have the assets on chain to back it up instantly. We stay at peg. There's no run. Because like what killed UST was they broke peg, and then there was a loss of confidence that the peg could be restored. So then everyone ran for the door, and there wasn't enough liquidity or assets to back up everyone's claim for money. With Frax, they already had the money. Like it's there. So like if it never depegs, no one's going to run for the door, basically. Also,
are you staking Frax anywhere? I was actually going to consider staking Frax, maybe some FXS stuff.
So you can stake Frax, you can lock Frax because they have a VE model. You can do it on Frax Finance, or once again, I'm a huge CVX Convex Finance guy, right? So you can go to Convex, and they have multiple Frax pools, FPI, they have Frax shares. And
when you add Frax, it'll like automatically convert it into like a pool distribution, right? You don't have to like buy each coin, right?
You single side stake it basically, and then you'll start.
But it converts it into the 3 though, right?
Huh?
Doesn't it convert automatically into the 3 coins?
I got it messed up here. So like if you drop in Frax shares, it'll convert it into CVX, FXS basically. And then you can just deposit that in Curve. That gives you the pool token. And then you take that pool token and put it into Convex basically. Then you start earning yield forever, right? Like they'll pay you, a breakdown of, let's say it's 35% interest. They'll pay you in Curve, they'll pay you in CVX, and then they'll pay you in Frax or whatever they choose to incentivize that pool with. Yeah. So you're getting multiple forms of income. And as near as I can tell, like there's such a large federation of protocols and DAOs and venture capital flooding into this thing that like it is sucking up all of the inflationary output that Curve is putting up. There are days when Convex Finance sucks up all the Curve that was emitted that day. Sometimes they suck up like 140% of the Curve that was emitted that day, just because there were times previous to Convex existence it wasn't out there grabbing liquidity. And so like something like that just doesn't die. Go ahead.
Yeah, and you can borrow it too. So like that's like how you get the 140%.
Yeah, and they're creating wrappers so that you can take your vote lock CVX and leverage that as well. So then you can get stable coins and then still have the income coming in from your CVX position. So like you can do really awesome things with that, right? So let's say there's a big unlock coming and you're worried the price is going to dip. you can take those stable coins and then create a hedge or create a short against CVX on the right exchange. And if it dips, okay, cool. You just got money because you were shorting it and you made your money. You close your short, take your profits, pay back your loan, and do whatever
You
you
got to
want.
be really careful about that though.
Yeah, I
Because like
don't really.
with the liquidation risks involved in that, I mean, like you can lose both sides when you're trying to protect it. You know what I mean?
So
You
with
gotta
me personally, I don't do anything with leverage, right? Like I'm not a leverage guy. Like I think in very specific scenarios you can use it,
yeah,
but I'm more of a long only type of guy. Like I don't
yeah.
short things. I pretty much just, like I said before, long-term perspective. Like where is Frax going? Where is CVX going? Where is Bitcoin and Ethereum going? Just buy and hold and you'll be fine. Now, if you're in the peak of a market and you notice the sentiment's like just completely batshit, like things don't make sense, that's maybe when you think about taking some off the table, take profits, get out, right? Or if Bitcoin is coming down from its all-time high and it passes that bull market support band, get out. Like don't stick around, don't see what happens. Take your profits that you wanted to take, step away, leave your moon bags in place, and just watch what happens for the next 2 to 3 months. Because that's basically what happens literally every time Bitcoin drops below that bull market support band. It's a 2 to 3 month wait to see if it's not going to be an extended bear market. So, like, with that knowledge, like, you don't have to be a great trading pro. Like, just long term swing trade is basically all you're really doing at that point.
Yeah, it
Um,
is. Well, what do you think
and
is the biggest risk in crypto?
to in crypto in general,
Yeah, this is just the biggest risk or main risk.
ooh, I'm just
For
going to
me,
be,
literally, I think it's just regulatory risk.
yeah, you took the words right out of my mouth, man. So, like, it's going to be the government's coming for it one way or
Isn't
the
that
other. I know you're in the
hilarious?
former, right?
Look, we're here to protect you.
No, they're here to protect us from gains, right? Like I have watched time and time again as like accredited investor laws come and root out retail investment so that big money can roll in and do what they want with it. And I'm just like, this is like coming from the retail investor standpoint, like it's basically being placed in a glass jar and you're told, hey, you can do anything you want. This is the American dream, except for this, and this, which we know makes money. Don't do that, right? Because you're an
Yeah.
accredited investor. You're too dumb, right?
The funny thing is, we're the ones who figure out that it makes money, and then they're like, "Hold on, you're not allowed to do that."
Bing, exactly. Like the perfect analogy I can use is Celsius. Are you aware of Celsius?
Yes, yeah, Celsius right now, yeah, and even
Mhm.
BlockFi. I mean,
Yeah, I mean, BlockFi, it's on its way out, man. They fell in love with
you don't think they
GDP.
could actually make it at all now that their pool is so small?
No, I don't think so, because they've just been dropping their rates ever since I
Oh,
started with them, right? So like it gets to the point where it's no longer worth the risk of letting BlockFi hold your assets if you're getting zero return, right? Or
huh.
effectively close enough to it.
Well,
Whereas
that's why I'm wondering, why do people accept? Like, I'm looking at the Curve APYs, and they're so small. I'm like, why are you even bothering? For
yeah,
some stable
so
coins.
if you come in with size, right? Because like Curve is for whales. Like you got to understand, like multi-million dollar trades, it's cheaper to go with, let's say, Uniswap or Debt 1inch or whatever if you're doing like a few $1,000 trades, right? But if you're trading millions or tens of millions, you go to Curve because the slippage is designed to protect you in that scenario. Like
Right,
it
it's designed for
always
the
be
stable
cheap.
coins. But I'm
You
wondering
got
from
to
like the
realize what
actual
Curve,
staking side, like what's the
huh?
incentive on the staking side? It just seems like really low. Like you could probably get better rates just in a bond. It sounds silly
All
to me.
right, so are we talking about Curve or Convex? Because the two are different, and that's going to affect my answer.
So I'm gonna say Curve right now because I'm looking at some Curve APYs. Convex ones seem to be a little better because of the rewards and stuff.
Yeah,
But the Curve APYs, the idea to me there is like, hey, come here for some stable yield on your stable coins, and you go there and it's like 0.2% to 0.8%
yeah,
APY, and you're like, dude, I can get a 3% bond. Yeah, I don't know, like that.
yeah.
That's how I'm seeing it.
Garbage. So how should I put this? If you're in a pool that's incentivized,
The
all of a
incentives, yeah,
sudden
the
that
incentives.
goes up a lot, right?
Yeah.
Um,
But even the incentives right now, like let me see, curve.fi.
you'll see it go up to maybe 7 or 8% sometimes. Sometimes you'll see 24%, right? Depending on what set of assets are in that pool. But with Curve, basically it's a stable swap, and then people just park their money there and LP it so that they can get the fees.
But okay, for example, here the 3 pool. Yeah, there's the base APY of 0.1%, which is terrible. And then they have rewards. The rewards are like 0.23 to like 0.67%.
Nah, that ain't great, bro.
You know what I mean? So it's like
Um,
that's why I'm like I don't even know how to recommend like using Curve if this isn't the place. It
yeah.
seems to be.
So
Except sometimes once in a while if it shows up, synthetics sometimes seems to be a pretty decent one for yields.
yeah,
Seems for some reason they're giving you 5% CRV. That's pretty decent. I've also seen SUSD have interestingly high yields in other places, but if you look at the graph of their yields, they seem to like randomly spike and then kind of like fall back to normal levels. So I'm guessing that just means someone's kind of like using it somewhere and the borrow rate kind of went
I'm
up.
also wondering like if we're at the point of the market where like all the yields have contracted because everyone knows it's a bear, so they're all
Yeah,
flooding into the incentivized pools and it lowers the
yeah,
yield.
yeah.
Because there was a time when it was way higher. I promise you. I haven't looked
Yeah,
at
I
the
was
numbers.
watching these. There was a time when you can get 10% on a stable coin easy,
Yeah.
you know, and like a main stable coin in a main pool.
Yep.
Um, but like,
Now, not so much anymore, right? Because there's only so much incentivization going around on Curve, and
and
that's
the
where.
funny thing is, man,
Mhm.
that's because this is a free market and there's not a Fed controlling this stuff in the background. And so like the actual interest rates are actually reflecting the actual growth in the market. And so if there was growth in the market, you'd have a high interest rate to reflect that. So
Yep.
like, which is really crazy that like we see like the macroeconomic stuff going on right now where it's like you would expect the interest rates to be super high in the kind of environment of growth that we're having right now with the stock market and everything, but it's not. It's the
Nope.
complete opposite. And so like the market's getting all sorts of like incorrect informational
Yeah.
signals to trade off.
So what we're watching, you nailed it, man. Like we're actually watching a real free market in action. There is
Yeah,
no.
literally. Yeah, and in crypto for sure.
Yeah.
Yeah, yeah,
Um. So like earlier on, I said the markets are contracting, the yields are contracting, but like that's just because we're in bear mode. What happens when we're
I
in
think so
bull
too.
mode?
Yeah, but then the problem is during bull mode, no one wants to be in stable coins, and that's why the yields go up, obviously. But like at the same time, why would you? You know, but like maybe for like a section of your portfolio, or maybe or like to get in, it's like what I like to do personally is just like you take your sum and you shove it into stable coins, and then from there you kind of like allocate it out into stuff. But in the meantime, you can either generate yield or at least have it ready to move. You know,
Yeah.
but yeah.
So that's kind of my thesis, right? Like in a perfect world where I retire and live purely in a crypto world, I have probably a million or two sitting in stable coins earning like 3% interest, right?
What kind of protocols would you choose?
um,
Would you have
just the
anything in Curve
biggest,
at all?
huh?
Would you have anything in Curve at all at that point?
Probably, yeah. Because like if Curve is around when I have $2 million of stable coins, it's survived, it's battle tested, and it hasn't been exploited, right?
Right. Yeah.
I'm going for maximum safety at that point because this is the nest egg, and I'm just using that yield to pay my bills, service my
Right.
debt,
Right.
basically, right?
Totally.
Um, and and then I go further out on the risk curve and say maybe it's not parked on Curve directly, but it's on Convex because Convex gives you maximized yield immediately. You don't have to build up a layer of a massive chest of Curve, right?
Well,
Because
is that
Convex is
related
done
to
for
the
you.
okay, what is the CVX CRV token? That's related, right?
So CVX CRV is a soft peg to Curve CRV, basically. Like I say soft peg because it's not it's supposed to be 1-to-1, but it falls below peg sometimes. Occasionally it's over peg, but it's normally slightly below. Um, and Convex will then turn around and incentivize it to try to keep it somewhere near peg so people aren't incentivized to like just dump all their CVCRV.
Okay.
Um, and the idea
Because
with
I'm
that
looking
is,
at this thing over here on Curve.fi. The CVX CRV pool is just CRV plus CVX CRV, and that's giving you up to 30% in CRV rewards right now. So
yeah,
that's
go
pretty
look at
cool.
it on Convex. It's going to be over 55%, right? So, like,
Oh,
that's how Convex steals all the curve out of the system, right? So, like, when you take your
oh,
curve and you move it and stake it on a Convex, you get a better yield from it right off the gate, like noticeably better.
Huh.
That curve is then locked in perpetuity forever in the Convex program. So they get all the incentive and boosties from holding that curve. So basically what you have is curve, which is awesome, and then Convex, which is built directly on top of it. So Convex is sucking all the CRV out of curve and into itself, basically. Protocols then come in and just buy the Convex token, and they're able to direct the liquidity, like all the incentives.
Yeah, for governance and for their own
Yep.
thing, which is like huge right now because people are trying to get their own stable coins in. And I wonder like how long it'll last though, especially because we're talking about the regulatory issue.
It's going to last as long as the regulators don't crack down. Like that's
Right,
not going
right.
to stop. And even in a bear,
But
they're
what I'm wondering
absolutely
is,
going to need
so
Convex to direct that liquidity.
yes, but do you think that curve and this kinds of things will ever be used by like what's the biggest this can get? You know what I mean? Like is it a $1 trillion marketplace sitting in front of me right here that's like not being used? Or is it like is that just a pipe dream?
So it depends on how long this thing lasts, right? So
I think
I
so
don't
too.
think JP Morgan's ever going to come into the crypto space and throw $1 billion on curve, right? I don't see that. Or Convex. I think they're more likely to try to build their own and then use regulators to force people into their product, right? Because that's what big companies do in the US now. If crypto succeeds, and we both know it will, we both think it will, not financial advice. And it's around 10 years from now, and Curve is around 10 years from now. Yeah, it's a $1 trillion market cap company, right?
Yeah,
Like,
I mean, but that's just because of inflation, you know.
yeah, that is true.
Yeah.
But yeah, it is like $1 billion. It's already a multi-billion dollar protocol.
Yeah.
Like if you look at the TVL. But I think it is like $1 trillion thing, right? But this all has to do with Lindy and does it survive? Does it survive government attacks, right? Because the government's going to come for stablecoins sooner or later, hopefully later.
They keep talking about it, man. Eventually something's just going to happen and I don't know.
Mm-hmm. It's like there'll be another terror that blows up, but it'll blow up.
You know what's really a problem that people aren't really talking about right now? Like this happened a couple of months ago, but it signed into law or like it's or maybe not like signed passed, but like okay, like everything takes forever in the law, right? But like there was a bill to make miners of Bitcoin have to report their transactions and like for KYC stuff, which would be like
it's like not possible. Yeah.
Right? So yeah, that's still in law. That's still about to be signed. That's still, you know, like that.
Yeah.
There's just regulatory stuff all over the
enforcement
place.
agency is the IRS on that one, and they said they're not enforcing that. Like they don't have the means to even go about even trying to enforce that, basically. What you're looking at is basically Washington lobbyists at their finest, basically. There are companies that do not want crypto to take off. Like most of them are credit card companies, right? And they have.
You think they want to use them as their own infrastructure, though? You know what I mean? They even make their stuff cheaper and better and faster in the background.
I completely agree, but they don't want to disrupt themselves, right? So like they're just too lazy and incompetent. So like you look at MasterCard and Visa, they're balls deep in the crypto space. I don't know if you know that or not.
I know, I saw they're offering some stuff like that, yeah.
Yeah, they've created their own crypto rails. They can operate on Bitcoin and Ethereum. They can send that stuff in their network right now as we speak. They adapted, but like all the other ones, the smaller ones, no, they're not going to take the time to do that, right? So I think what that is like instead of like adapting to the times, they're using regulatory moats. They're using regulators and lawmakers to try to pass laws that make it impossible for the crypto companies to do their thing. But like when you're looking at Bitcoin miners, they're going after the major ones like Riot and there's like 3 other ones. I can't Blockware. I can't remember the names of them right now. Those are who those laws are really targeted at, right? Because they're the ones that have the majority of the hash power.
The pools, right? Yeah.
Yep, exactly. Because like if you study that law, like if I start a Bitcoin miner in my back room over here, no one's ever gonna know. Like,
Yeah.
no one's going to come
Well,
after
I
me
mean,
for ICAML, right? But
sometimes they can tell by your energy usage, and I've seen that.
mhm,
But yeah,
they can. But if I'm just running a single miner, a single node, that's not going to create enough of an energy spike. That is ridiculous, right? Like, no one's going to take the time to prosecute me on that because it's just not worth their time. But
yeah,
now, if someone's running a full
I guess.
farm with hundreds of miners, yeah, that's a different story. Someone's going to come for that guy, right? But the decentralized nature of it makes it to where like regulators can only target big targets, right? Like they don't go after individuals, or if they do, it's to make me an example so that other people don't try to do their own individual thing. But this is America. Like we don't really pay attention to the government unless like it's on our doorstep. So that's my thought. Like they'll use laws and regulations to try to like hamstring and hurt the industry. And I don't really see any other threats. Because like if you look at, let's say, Canada, for example, when they did that Canadian trucker thing, do you remember when they froze
Yeah.
people's funds and basically locked them out of the
Yes.
monetary system? That was a wake-up call to a shit ton of people. Like that actually helped Bitcoin and crypto because it's like they
Yeah.
started freezing the centralized accounts and people figured out real fast what was centralized and what wasn't. And then they proceeded to create a MetaMask, and they
Well,
just
even MetaMask blocked Venezuela.
well, so here's the thing about MetaMask. You can go after Infura, which is the main node, but there's also many other decentralized nodes that you can use inside of MetaMask besides Infura.
Okay.
They're not going to be able to lock all that stuff down, right? Because that's just individual people running nodes. Um, that's the beauty of MetaMask, but most people don't know enough about the system to take advantage of it.
I haven't even seen the option to change the node. But
Yeah,
yeah,
it's there. I just got to remember how to do it.
I honestly just like kind of stopped using it. Like honestly, I've stopped using most Ethereum stuff. I've been getting to other blockchains, so I haven't even seen
Mhm.
it in a while. But like, I just remember that being the news of MetaMask while I kind of wasn't using it. So it was like, oh, okay,
Yeah, it's
that
time to
happened.
go.
I wasn't even surprised, man, because it had to do with like the XRP Ripple lawsuit and like the consensus and Ethereum and that whole corruption going on, or alleged corruption and possible conflict of interest and whatever. It's
So Ethereum is so
craziness.
big now, sorry to cut you off,
No,
that
please, yeah,
they
go ahead.
have the legislators in their pockets, right?
I
Bitcoin has
exactly,
the
literally,
legislators in
I
their
feel like they
pocket.
paid them off completely. Yeah,
Yeah.
yeah,
So like even though it's decentralized, there are still very well capitalized organizations that
yeah.
like push their way
My
onto that.
worry though is that like, hey, like maybe they paid off people 8 years ago, and those people aren't in office anymore, and Ethereum might not have a free pass forever. You know what I mean? But if XRP ends up benefiting from this current lawsuit, then it could be the only actual coin with regulatory clarity, with
Yep.
actual in law signed. Because it's like Ethereum's isn't actual clarity, especially that we've noticed because of the XRP, the Ripple lawsuit coming out. Like where like the free speech is and isn't an opinion, or just an opinion of the guy, and like is and isn't actual guidance from the SEC or his department, or like it's just weird and complicated, and like it's very vague.
Yeah,
And
they tried to like backpedal is what they did. Like,
exactly, but
because
they're
I
trying
remember when that came
to
out,
play both sides.
the Ethereum maxes were like waving the victory flag around. They were so happy, man. And I was just like, oh, shit, maybe I need to buy some Ethereum. Probably should have because it was a lot cheaper back then. But
Everything was cheap back then.
yeah, but that once again, monotonically increasing, like Benjamin Cowan always says, right? Everything goes up in value if you look at it long enough. But ooh, and ever since, back to the point of the SEC, they've been walking that back. Like they literally attacked their own ruling, and I'm like, something ain't right there. And it's because I think they paid people off, threatened to sue whoever they needed to, and the SEC at the time, that administration backed down.
Yeah.
So yeah,
And new people are in it.
I agree.
That's the thing. There's new people in that whole system going on. So, yeah. Well, we're coming up on 2 hours here.